Hello, friends. Welcome to Nirmal Bang. I'm Piyush Jain, and today we are going to be talking about a company which is very soon going to get listed on the bourses. It's a new IPO coming your way, and this time we're talking about an energy distribution company. We're talking about IRM Energy, and joining us on the show today is the management of the company, Mr. Karan Kaushal, the CEO of the company, and Mr. Harshal Anjaya, the CFO of the company. Gentlemen, welcome to the show.
Thank you.
Thank you, Piyush. Thank you.
Karanji, let's start first with you. Help us understand what this company do, how basically this journey entirely began, why energy distribution. Help us understand.
Thank you, Piyush. So we are a city gas distribution company, and we are operating in four geographical areas, well spread across the geography of the country. This company was incorporated in 2015, and we got initial two licenses in 2016. One geographical area in Gujarat, which is Banaskantha, and second geographical area of Fatehgarh Sahib, which is in the state of Punjab. So, pursuant to our authorization, in less than 1 year, in 2017, we started our commercial operations in these two areas. Let me tell you that this company is very swift in this project rollout, and in less than 1 year, we were started clocking in revenue. And in the first year itself, we have done our operations in profit. This company has never operated in red. So, and going forward in 2018, we added one more geographical area, which is in the Saurashtra region of Gujarat, which is Diu and Gir Somnath. Um, and we and lastly, last year we have added another GA, which is in the state of Tamil Nadu, which is a highly lucrative area of Namakkal and Tiruchirappalli. Tiruchirappalli is the fourth largest city of Tamil Nadu, and we are very excited about this geographical area. Now, coming to your question of why into city gas distribution, why going into this business? So, in 2015, this new bidding round was on the anvil, and Cadila Pharmaceuticals, who is our promoter, they are always on a lookout for new businesses which are high growth potential, which have high growth potential. So our chairman, Mr. Sahu, who is a very good friends with Mr. Rajiv Modi, who is the MD and CMD and director of managing director of Cadila Pharmaceuticals. They had a meeting, and they decided that yes, let us form a new energy venture and participate in the forthcoming bidding round. And from then on, out of the five GAs we bid for, we won two GAs in 2016, and and in less than 6 years, this company has come this far that we are now on the process for getting a listing.
Indeed, exciting. Now, help us understand from the perspective of how it has been on a pricing front, because volume growth has been steady for the last 2 3 years. I was looking at the numbers have been steadily growing, both in terms of expansion within your old circles and new circles. The customers will be continuously sort of rolling in. From the perspective of pricing, how it has been the last year actually, or the last 2 years, how has been the pricing for you?
So, last 2 years have been an aberration both on positive and negative side. 2022 was positive for the entire sector because everyone made a windfall gain. 2023, because of the Ukraine-Russia war, the gas prices skyrocketed in the Asia and other overseas market, and that impacted the margins of all the companies, upstream, downstream, and midstream. And we were also impacted to a reasonable extent because we have a balanced portfolio of CNG and PNG. So impact to us was not that much severe as compared to other entities. In 2023, because of the Ukraine war, we took a hit in the margin because we are still in the process of ramping up our PNG connectivity infrastructure in Fatehgarh Sahib, where we have a big industrial cluster of 400 industries, for which we were in the process of providing the connectivity. So, in order to ensure that we have the robust connection book from the industries in terms of registrations, we strategically at a management level decided not to pass on the increase in cost at a full 100%, and that's how our EBITDA number got an hit last year. But In the Q1 of current year, we have done an EBITDA margin of around 18%. On an EBITDA per SCM basis, we have done an EBITDA per SCM of 9.91, including other income, and 9 rupees excluding other income. If we compare it with FY23, we did a EBITDA per SCM of close to 6 rupees around. So we have grown the growth in terms of EBITDA numbers compared to the fiscal 23 numbers. Obviously, fiscal 22 it is not still comparable because it was a windfall year for us. So we are ramping up of our infrastructure both in terms of pipeline and CNG network, and that will help us in maximizing our returns and margins going forward.
Right. And in your business, what is the sort of average EBITDA as per your own estimate? I'm not asking about future, but largely based on the multiple years in the past.
So,
What is the
so
average EBITDA margin?
average margin sectoral would be somewhere around 7.5-8 rupees, between
And
seven
how
and a
much?
half to eight and a
Percentage,
half. And in terms of percentages, it would be around 15-16 odd percentage.
Okay. That's where actually you're trending right now in the last quarter.
Yes.
Um, Talking about that, let's try and simplify more for our viewers. In terms of raw materials, like from whom you would be like purchasing the sort of gas for your industrial customers.
So for industrial and commercial segment, for which we have to buy RLNG from the open market, we have a mid to long term sourcing arrangements with Reliance and BP from their KG-D6 basin, and we have other contracts from GAIL and India Gas Solutions. India Gas Solution is again a trading arm of Reliance and BP. So to cater the requirement of our industrial and commercial segment, we have bulk of our requirement coming up from the domestically produced high pressure, high temperature gas. There is an advantage there because while there is a linkages formula link pricing in those fields, but there is a overall ceiling fixed by the government of India, which just recently from October 1st they have lowered down from $12.11 to $9.96. So it was a strategic decision back in 2021 to participate in the Reliance bidding round when it was announced, and we have as on date participated in all the four bidding rounds of Reliance, because we see that it is advantageous as it helps us in mitigating the pricing risks in case if there is a war-like scenario and the pricing goes haywire. The GAIL and IGS contracts are from open market, and there is a different pricing formula, but still at a blended level, we are able to optimize our overall cost of sourcing, and that's how we are able to provide very competitive pricing to our customers in industrial and commercial segment.
Right. And anything in residential?
In residential and CNG, we are getting a domestic gas, subsidized gas from Government of India through GAIL. So there is a pricing and policy guidelines wherein the domestically produced gas is allocated to all the CGD entities through GAIL. And also in January 2023, there was a policy guidelines announced by MOPNG wherein the HPHT gas produced by all the players, be it GAIL, sorry, not GAIL, ONGC and Reliance and
Mhm.
BP. The first priority is given to CGD sector for CNG and PNG domestic, then priority is given to fertilizer, then power, and so on. So there is a clear visibility of getting steady and continuous supply of gas to cater the demand of CNG and PNG domestic. We are currently getting 90% allocation from the government APM source, and balance 10% we are getting the HPHT. In the APM pricing also, there is a new regime pricing guidelines announced in April 2023, wherein the government fixed the prices of APM gas for at least 2 years at an upper end of $6.50 and a lower end of $4. And these prices are fixed for 2 years with a incremental of only $0.25 per MMBTU from third year onwards. So there is a clear visibility on the input cost for the CNG and PNG domestic segment also now with this implementation of the new revised policy guidelines from April 23.
Usually, this is the famous Kirit Parikh report, which was recommendation, which was implemented from 1st of
Yes.
April onward. Yeah.
Yeah, Kiritji is a veteran, has worked on numerous reports. Now,
Yes.
one question I want to come back to you, Karanji. Help us understand, or Anshaji, help us understand from a domestic perspective and versus imported perspective. Obviously, domestic would be cheaper, but in terms of predictability and strategically sort of making sure the raw material is there with you, is imported LNG also an option which is considered by you?
It is an option, but the current policy framework makes the domestic gas a better
Cheaper.
choice for us. For us, right? Because it is subject to a ceiling. At least it gives us assurance that this price will not go beyond a certain level. uh, of global sourcing global gases from outside is subject to a lot of volatility.
Right.
So as a choice, we want to maintain at least more than 60 to 70% share of domestic gas in our product mix, raw material mix. But going forward, we have solid reasons to believe that there is a lot of capacity additions happening on a global level. Qatar, US, Australia, they are all adding to their uh, LNG capacities, and India is also adding to its capacity of this LNG terminals across the ports. So a lot of oversupply is going to be there in the next 2 years, and we feel that the global LNG prices will be a good option for us to look at whenever our demand goes up.
Sure. What's the capital intensity of the business at present, and also help me understand how much funds you're raising in this IPO? What's the fund usage for that?
So as on date, we have invested close to 450 odd crores on the capital front, and in terms of our future requirements, we are raising around 545 crores through this IPO, of which around 308 crores will go only to fund the capital expenditure of Trichy and Namakkal, which is the 4GA we have won, over which will be spent over a period of next 3 years. We will also prepay 135 crores of our outstanding long-term borrowings. So our borrowing also will go down, and borrowing cost also will go down, and balance will be the general corporate purpose.
Sure. So when you're going to repay the debt, what's the total net debt which is going to remain on your balance sheet?
So after the prepayment, the net debt would be around 165 crores.
Oh, so it's almost 40% or 45% repayment, and half I think basically is going to remain there.
Yeah.
Yes, yes.
Right. And from that perspective, if we actually take a look in terms of your profits, last year around 63 crores, before that around another 128 crores. So that basically leaves balance sheet at a very, very healthy level. So that is something
Yes.
I think which our viewers should take note of. EBITDA, in fact, was 118 crores last year. Before that, 200 crores last year. So largely we are talking about, yeah, almost a sort of a very good healthy level of that debt. But also help us understand, when you're investing 300 crores plus in your newly won circle, what's the sort of average asset turnover you generate once the asset starts generating revenue? So if 300 crore plus is getting invested in that circle, what's the average revenue you're expecting per year?
So once we are done with the 300 odd crores capex, minimum asset turnover we are expecting around 1.5 to 1.75.
Thanks.
Okay.
Yeah.
And that would be a mature asset revenue. It's a sort of initial asset
No,
revenue.
it will be initial asset turnover, because after that also there will be fair bit of infrastructure to be rolled out, and this asset turnover ratio will improve subsequently once we implement any additional capital expenditure required for that year.
Fair to say that even if you put money over the next 1 or 2 quarters, you will still need 3 to 4 quarters really to get the things going. Like how much time you really need to get the revenue
So
kicking in.
yeah, so as we speak, we have already commenced our operations partially in Namakkal and Trichy GA. We have commissioned 4 stations already. While we
Okay.
are in the IPO stage, we have not rolled back on our capital expenditure plan, because it's a supply-driven market. You have to push your infrastructure so that public people will see the infrastructure, then only they will go for conversion and you can provide the connectivity. So we are very prudent in terms of rolling out of our capex plan and infrastructure plan, and that's how we are implementing the project.
Just to add to what Harshalji said, POG, this we
Sure.
are now major portion of our this capex is being directed towards the CNG segment in the new GA, which is a high margin segment for us. So we want to realize and get better returns. So that is why we are pushing our capex towards that segment. We have a basis to it because there is a lot of demand potential in this GA. There's a huge vehicle base in Namakkal and Trichy, which is waiting for CNG as an offering, as a fuel over there. So Tamil Nadu, just let me explain you. Tamil Nadu is where Gujarat was 15, 20 years back in terms of CGD infrastructure. There is suddenly there is a CNG CGD infrastructure coming up over there in all the districts, and CNG as a fuel will is gaining footprint over there, especially in Chennai, Pondicherry, and now Trichy and Kanyakumari and Madurai. So we are a part. We have entered into this market at the right time, and we are really excited about this new GA.
Right. Even actually, I was doing a back of the envelope calculation for our viewers. So 300 crore plus going as an investment, maybe for the first phase of this circle. Even if 1.5 times is the average asset turnover, we're talking about 500 crore plus revenue generation whenever it starts getting generated. And that definitely means strong actual revenue growth. If I just look at your FY23 revenue, there's something which I think our viewers will actually like to have a close tab on in terms of what's happening there. One Karanji, and any plan to actually win or participate in for any new circle, any sort of those plans?
Recently the regulator has published a list of 8 states where there will be new GAs for allocation. We are waiting for the detailed list from the regulator, and some of these GAs are nearby our existing geographical areas, especially in the North India where Fatehgarh Sahib is. We would be seriously looking at these areas, and we want to grow in terms of the number of GAs we are having. We want to at least have 5 to 6 GAs in our kitty. So we want to add 2 more GAs. So we'll be aggressively bidding in these rounds. And also, PUG, this sector, we are also in lookout for any inorganic opportunities. So that is something which we will explore post we uh, complete this listing and issue process.
Well, makes sense. And I think from our side, our viewer side, I think we would like to extend you all the best wishes for a very successful IPO. And perhaps I think also for many new circles for you.
Thank
Thank
you.
you.
Thank you,
very
PUG.
much.
Thank you
Thank
for
you
your
very much,
time.
PUC. Thank you.
And dear viewers, with that, we come to the end of this conversation. Hope you enjoyed it.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.